This is Alan Bush with ADMIS. In the stock index futures, in fact, for all of the financial futures markets, it looks like the main influence is the White House apparent interest in getting the congressional approval of a U.S. strike against the Syrian government. So this could delay any potential strike in that area, that causing stock index futures to advance. Also, we had some better economic data out of China. That supported the stock index futures market. In addition, we had the ISM manufacturing index coming in better than expected. Construction spending also coming in better than expected. So all of these things helping stock index futures to gain today. However, we feel that these gains will probably not follow through, since the dominant influence we feel is the likely tapering of the Fed's quantitative easing program later this year, whether it's at the upcoming meeting later this month or possibly at the December meeting. A tapering, we believe, is in the works, and that should be the influence that pressure stock index futures between now and when the actual tapering is announced. Over in the currency, seeing the dollar index trading higher, some pressure in the euro currency, even though we did have some better than expected economic numbers out of the eurozone. Also, we are seeing the pound higher with better data there. However, the Australian dollar is the star performer so far today, with good gains in that currency. This after the Reserve Bank of Australia keeping their benchmark interest rate unchanged at 2.5%. The main reason for gains in the Aussie dollar, not just the better than expected Chinese data, but the Reserve Bank of Australia failing to indicate that they are going to cut rates later this year, and that was the surprise that helped the Australian dollar to gain. However, we feel that the dominant influence that has taken this currency sharply lower over the last year or two will remain, and that is the interest rate differentials continue to be bearish for the Australian dollar. So look for lower prices longer term in spite of the gains that we have seen this morning. In fact, I think that a good portion of the gains will be given back later today in the Aussie dollar. And credit markets, sharply lower prices with the 30-year bond over 2 full points lower. A lot of negative news affecting the treasuries, especially the long end. The apparent easing of tensions as far as a potential U.S. military strike against Syria, that putting some pressure on treasuries in a flight to quality long liquidation move. Better economic data out of China, a bit bearish. The two reports that we had here in the U.S. coming in better than expected, the ISM report and factory orders in general, putting pressure on treasuries. So between now and today's close, I would expect further weakness. Longer term, still thinking that the main trend is lower and that we will make new lows for the move. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.